before we do that, viewers, the number that you can write to us at is going to be flashing on the top of your screens as well as on your screens. Now, do remember that when you write to us, do mention your buy price for the stocks that you're already invested in. And for the stocks that you're aiming to invest in, do mention the time horizon that you then have in mind. Firstly, let's kickstart taking your queries for the first one that we have coming in. Sharmila, first of all, I'd like to welcome you onto the show. Thank you so much for joining us today. Let's kickstart taking the first query that we have, and the first one is coming in on L&T Finance. 1,000 shares is what an investor is holding on to. Now, he's not mentioned his name. Do mention your names when you do write to us, viewers. But the first one is about L&T Finance, 1,000 shares at a buy price of 176. Sharmila, what do you make of this one?
Well, overall, this has, the whole sector seems to be going through some sort of pain, but this is a stock within that sector that I do like. However, I think that at this valuation, it looks fairly valued to me. So if you want to continue to hold, then I think, your holding period would be anywhere in the range of 12 to 18 months. If you're ready for that kind of a waiting period, you can stay put.
That's the take coming in on L&T Finance. A very good morning to you, Sharmila. Thank you so much for joining us on the show. And let's talk about this next query coming from Jay. She's writing to us from Mumbai. He has 150 shares of Mahindra Mahindra, which he's purchased at levels of 2,890 rupees per share. He wants to know whether he should go ahead and buy some more at current price for the longer term. What's your take coming in from Mahindra Mahindra? This one has seen a spectacular rise. The last 2 years actually has been really good for Mahindra Mahindra. It was once, I think last year before last, it was actually the stock of the year as well. So what's your take on Mahindra Mahindra? You think now is the right time to go ahead and buy some more, add on to those levels?
I think the recent excitement could be because they've just launched 2 electric vehicles, and both the vehicles look very good, I must say that. And I also saw another interesting video of a electric vehicle that they're about to launch. So all in all, I think that part of their portfolio, that game seems to be getting stronger, and which is why we could have been sort of seeing the kind of buying that we've seen over the last couple of days. So definitely, I'm also I own the stock. I used to own a Mahindra car also for the longest time. So I am a fan in that sense. But I think that at this price, perhaps you should just wait a little. While I do think it's a stock for the long run, and overall I'm positive not just on Mahindra and Mahindra, but on the entire auto space. In this particular stock, I think it might do you well to just wait a little bit or just stagger your buying rather than buying everything at one go. Because this recent sort of spurt that we've seen in prices, which is not been sort of moving with the rest of the market, has been because of these new launches that they've made, which are very exciting. So just wait a bit and stagger your buying is what I would advise.
To M&M, so that's the view coming in right there. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get to answers for all of your stock-related queries. Remember, viewers, you can write to us on the number flashing on the top of your screen. And joining us now on the show, we also have Osho Krishan, who's joining us on the technicals, while on the fundamentals, we already have Sharmila Joshi on the show with us. Once again, good morning to both of you. And let me continue taking query. This one is coming in from Praveen. He's writing to us from Chennai. And he's looking for dividend income for the long term. And he wants to know, based on that, does it make sense to go ahead and buy PFC or NTPC at current price? What's your take, Sharmila? Do you think these two are the best bet if you want to play the dividend return theme?
Well, I think you just need to sort of see a stock and see what kind of dividend yield they are at the present moment. Because I think when you're saying you want to buy a stock for dividend, you also need to see what kind of yield it is giving as compared to its price at the moment. So when you just say a stock for dividend, yes, obviously you should go for stocks where there is a good history of dividend. But at the same time, you need to see at what price you're getting the stocks at also. So yes, I think definitely PFC, NTPC, these have been the stocks that people have gone approach when they have that dividend yield in mind. I think at the current moment PFC seems to be a little better than NTPC. I think another stock which is always on the list of people who invest for dividend yield is Coal India. that dividend yield seems to suggest that it's 6% at the moment. So that seems to be a better stock in that sense. So I think that those are the kind of, I'm just giving you a hint as to how you could select the stocks at this moment. Just try and see that it's a sort of a safe stock, which, any PSU in that sense is safe. So look at the dividend yield and then make your purchase. I think at this moment, Coal India seems a little better than PFC and NTPC. And between the two, I think PSC would be the better stock. And I think overall, if you want to even just buy it for sort of a better return, PFC would be my preference to NTPC. And I think it has corrected a bit also. So you could use that correction to enter PFC.
Some of the dividend plays that Sharmila is looking at, but I'm going to come to you, Osho. Firstly, good morning. And the first query that we have coming in for you specifically is coming in from Dr. Malik, a senior citizen from Noida, who wants to ask about Coforge as well as Ireda. He wants to know if this is a good time to enter fresh at these levels in both of these counters. What do you make of them?
Very good morning to all of you. Looking at the overall movement in the Coforge, in the IT pack, Coforge has been outperformer in this sector, has already moved approximately 40% in the year and also near about 50% in the last year also. So there is a very strong movement in this counter with no respite of correction or profit booking in the last 2 years. So I expect that if there can be a decent correction coming in the coming period, approximately around the zone of 75 or 7,800 kind of a zone, that would be an apt zone to accumulate this counter. Currently, at current levels, this counter is overly stretched on the technical parameters, so better to stay on the sidelines and look for some kind of profit booking in this counter. And once if there will be any kind of correction in the coming period, then one can try to accumulate from short to medium term time frame.
This next query is coming from Dr. Singh. He's a senior citizen. He's already purchased REC at levels of 532 rupees per share. He wants to add some more or at least stay put till the price starts moving up. What's the strategy, Osho, here? Should he go ahead and buy some more of REC? Because this one also, just like PFC, has seen a reasonable correction or so. In the last 3 months, 14% correction coming in for REC. Do you think he should buy some more or just be with the quantity that he already has?
Overall, as of now, the fresh recommendation or fresh buying recommendation in this counter is not very much feasible at current levels because currently the counter is hovering into a very flattish or sideways pattern. But overall, as you have mentioned that the counter has already corrected nearly 14-15% from its peak, and it is forming a very strong base near the 200-day simple moving average. So in the coming period, if there will be any kind of breakout of the sloping trend line, which will be above 540 odd levels, then that will be an apt zone to enter into this counter. So I would say better to wait for some more time perspective and buy above the zone of 540 from short to medium term time frame.
All right, then that's a take coming in as far as REC is concerned. Sharmila, I'm going to come to you with the next one because we do have Venkat Rao writing to us from Visakhapatnam, who's a senior citizen, long-term investor as well. Wants to know about AU Small Finance Bank, 30 shares, and buy price is 765. What do you have in mind for this one?
And I'm sorry, I missed the buying price. The buying price.
The buying price is 765, 30 shares.
Okay, so he has bought at a significantly higher price than where it's at now. And the going seems to be a little tough for these small finance or micro cap sort of fund companies. But overall, I think, given the kind of correction that we've seen, also the valuations at which the company is at, as well as overall, my expectation for how this sector will pan out, yes, I think there will be near-term concerns. Maybe you could see a further erosion of price. But overall, because asset quality has gotten hit across and so on and so forth. But I think if you have the patience, then this is not the price to sell. Overall, this is a sector as well as a stock that I'm positive on. So I would, if you have the wherewithal to hold on, then please do so. Because according to me, this would be the wrong price to sell. My first target on the stock would be closer to 640. So you could revisit the stock at that price and then take a call.
All right, so that's the take coming in on AU Small Finance. This one is coming from Gautam, writing to us from Mumbai. He has 500 shares of Exide at a price of around 526, above 1,500 shares of New India Assurance which he's purchased at the levels of about 285 rupees per share. He wants to know whether he should continue to hold, exit, or accumulate some more at this point in time. What's your take coming in on New India Assurance, which has actually seen a sharp correction already, actually, Osho, as well as Exide, 526 is the buy price.
See, firstly, for Exide, this counter have seen a decent correction from the peak of approximately 600 odd levels and has been hovering into the zone of lower lows on the technical time frame. But in the recent period, the counter have started gaining some traction, although conviction still lacks in this counter. But I expect that for the short-term perspective, near about 475 to 80 is the zone where the counter can see some kind of a strong pullback. And if it crosses the zone of 480 on a decisive manner, then we can see a continuation on the higher end. So I would advise to stay invested in this counter for the short-term perspective. If it breaches 480, then there can be a decent follow-up pullback in the counter from medium-term time frame. Now, New India Insurance again have seen a decent movement in the recent period. There has been some kind of consolidation in this counter, and from here onwards, one can expect a decent move in this counter. Also, I am expecting that approximately around the zone of 200, 205 is the immediate resilience for the counter. The time it breaches the zone of 205, then we can see a continuation in the higher trend of the stock.
You what, Osho, I'm going to come right back to you because the next query that we also have is coming in from Matthew, who's a senior citizen writing to us from Kochi, and he wants to know about Bharat Dynamics. Now, 1,000 shares is what he's holding on to. Buy price is 950 rupees. What do you make of this counter then?
See, overall, the defensive space is looking very, very positive to me. I am expecting that majority of the counters have corrected nearly 35 to 40% from its peak, and from here onwards, there can be a decisive up move that can be seen in majority of the defensive space. So, Bharat Dynamics coming from the same space can see very strong resurgence in the near period. For now, the trajectory of lower lows has been negated with the recent move in this counter. So, I expect that from here onwards or in the coming period, there can be a decent and gradual up movement in this counter. Immediately, I am expecting a target of nearly 1320, 1340 odd levels. The time it breaches the zone of 1340, then there can be further continuation from medium to long term perspective. So one should definitely stay invested in BDL.
All right, this one's coming from Ravi, writing to us from Chennai. He has about 35 shares of Alkyl Amines, which he's purchased at levels of 3,236 rupees per share. He has signed also in his portfolio about 20 shares at a price of 1,492. Sharmila, he wants to know whether he should stay put with both of these counters. And in IT stock, is signed a good bet, or should he look at some other IT play?
So alkyl amines, I think definitely stay put. Once again, the advice would be that you probably need to have a sort of a longish holding period in your mind, given the fact that the stock has corrected. But overall, this is a sector that I do like, and as we will see things sort of easing across the globe, you will, we did see this sort of whole sector go up during the COVID period, and then it's been sort of range bound over the last 12 months or so. But now one is getting a sense that things are coming back to, meaning a lot of the issues are getting sorted out, and things could look better from here. So the advice on alkyl amines would be to hold. Because I think from a valuation perspective, this is not the price to sell. Coming to Cyient again, I think it's a sector that I do like, given everything that is happening around us and how things are changing. That said, the valuations here seem to be fair. So probably definitely don't buy fresh at this price, but you could continue to hold what you have.
And that's the take as far as Cyient is concerned. Time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries. So don't go anywhere.
On and let's get back to all your stock related queries. Then we do have Osho as well as Sharmila with us, and the next query that I have, Sharmila, is coming in from K. Kumar, who is a senior citizen from Chennai, and he wants some help with NTPC Green Energy. He has been allotted the shares in the IPO, as well as what we have seen is that after a muted listing, the stock just skyrocketed. But Sharmila, what's the long-term view on this one? Good to hold on?
Yes, I think so, because I think overall, the way I look at energy as a sector, first of all, it's going to, I think, emerge as a strong sector going ahead. And within that, I think, green, sustainable, things that you can recycle. All these things are going to become more important. They're like the keywords that you should be tracking. So in that sense, NTPC Green is a good initiative and a good company to be invested in, especially if you have the long term in mind. But bear in mind, by long term, I do mean even more than 18 months. I think you should be willing to give this idea at least 3 to 5 years to really fully play off its potential.
Right, and that was an important distinction that Sharmila made with her pick right there for NTPC Green, that long term for her actually means more than 18 months. So I hope that investors listening to us. But Satya has the next query that he sent to us, Osho, and he's writing to us about CMS Info Systems. He's been holding this counter for the last 6 months. Buy price is 570 rupees. He can actually hold on for the next 6 to 9 months. But what is your take when it comes to this one?
Well, this counter has seen a kind of a very strong correction from the zone of 600 towards and has fallen below 490 odd levels. But there has been no sign of respite in this counter for the time being. But I would say the time it breaches the zone of 500 or 510, then we can see some kind of a respite or a pullback in the coming future. So I would be saying that if someone is already holding the position, then better to stay invested, because after a very deep correction from here onwards, the downside is very much limited in this counter. So better to stay invested. The time it breaches the zone of 510 on a decisive manner, then we again need to review that whether it has the potential to have another kind of a recovery phase or not. If yes, then obviously the next target comes around the zone of 550 to 560 from short-term perspective.
All right, so that's the take coming in on CMS Info. But moving on to the next query then, and this one is coming in on Colgate as well as Hindustan Copper. And Osho, why don't you help Rakesh Gupta from New Delhi, who has bought 230 shares of Colgate at a price of 3,498 rupees. Off late, the stock has been showing some momentum on the back of the news flow, brokerage notes, and more. So, do you believe that is this a good time to maybe average out and then look for an exit, or you believe that 3,500 is something that is likely on the cards? And Osho, he also wants an advice in Hindustan Copper, 650 shares here with a buy price of 333 rupees.
See, firstly, for Kolpal, this counter, as you have mentioned, have seen a very steep correction from the zone of 3,800 towards approximately 2,700. But from 2,700, we have witnessed a very strong pullback. Even on the technical front, the oversold parameters have turned positively with a positive crossover, and the counter have started gaining a very strong pullback. So I expect that from here onwards, there can be a decent pullback in this counter. One should definitely stay intact with their investment, or even want to, if they want to, then can have average the counter also at current levels, because I'm expecting that after a very long duration, the counter have seen some kind of positive respite on the technical indicators. So I expect that from here onwards, 3,350 to 3,400 can be tested in a very short term time frame. And the time we breach the zone of 3,400, then there can be a continuation to a further upward trend. But for now, short term target comes around 3,400. One can add positions around 3,000 current levels for 400 kind of a levels in short term. The other one was Hind Copper. Then this counter again, if I have to say, has seen a decent movement in the recent period. Overall, there has been a formation of lower highs, lower lows formation only, but the technical parameters have started showcasing a positive divergence, which is a very positive sign in the falling market. So I expect that in the coming period, there can be a decent up move, but again, 290 to 300 is a very crucial zone that we need to watch for. The time it breaches the zone of 300, there will be a very strong conviction in this counter for a higher targets of approximately 345 to 350 in the coming period. But for now, for the time being, I would say to stay invested. 290, 300 is the short-term target. If it breaches from above 300, then one can even add positions above 300 for higher target of nearly 350.
Those are the levels to watch out for when it comes to Colgate Palmolive as well as Hindustan Copper. Osho, I'm going to come right back to you because we do have Jay Krishnan writing to us from Kerala, wants to know about Amber Enterprises. In fact, his buy price he's mentioned is 6,490. He's not mentioned how many stocks he's purchased, but he's purchased them for the medium term. What do you make of this counter then?
See, overall, this counter have already gained approximately 100%, two times from the last year closer. So I expect that there can be a very strong move that has been seen, but this is the first time that the counter have started having some kind of consolidation around the zone of 6300, 6350 odd levels. So after a very long period and a vertical rally, the stock has started consolidating in a very narrow zone from 6000 on the lower end and 6350 on the higher end. So the such kind of breather can be expected in these counters after having a very strong movement on the higher end. But for the time being, I would say to better stick in this investment with a stop loss placed below 6000, because if there will be any kind of further correction, that can trigger some kind of profit booking in this counter. So one should stay invested with a stop loss of 6000 from short term point of view. If there will be any kind of pullback or any kind of reversal in the trend in the coming period, then we can see a continuation on the higher end. But for safeguarding the positions, one should definitely keep a stop loss of 6000.
All right, that's the day coming in on Amber Enterprise. But Sharmila, let's get back to you. And this query that I have is coming in from Anand from Bangalore. And what he says is he's already holding 100 shares of BOB. His buy price is 222 rupees, but he's not getting the desired return. So would you advise to like book this out, some profits that he has right now, and make a switch to SBI at this price point?
Honestly, both are stocks that I like. So, and both are different in that sense that SBI is your largest bank in the country, and Bank of Baroda would be a smaller bank, and within the smaller banks, probably it would be a leader. So, in that sense, they're both leaders. Both are available at very decent valuations. Yes, I think the near-term impact of the news fallout, etc., has not been the best for banking as a sector. Again, it's a sector that I do like. So I don't know. I think if you just want to buy fresh, buy SBI. But if you want to, it might, according to me, it's a better idea to just stay put with Bank of Baroda at current valuations. And hopefully from here things will settle and you will start seeing better returns. But my stock, my target for Bank of Baroda would be significantly higher than what the current market price is at. So my recommendation would be to hold.
Alright, so that's a whole recommendation coming in right there. And Sharmila does mention that the banking space is definitely making it to her radar. But Osho, I'm going to come right back to you because Richie is writing to us from Andhra Pradesh, wants to know about Infosys. In fact, he wants to know at what price he can buy it for the short term. What do you have in mind?
See, for short-term perspective, this counter is actually having a very strong and consolidation phase for the time being. So there are two scenarios. One should either buy this counter above the zone of 1930 on the daily time frame chart, or if there will be any kind of correction, any kind of mild correction towards the zone of 1820 to 1800, then these two scenarios are something where one should try to buy this counter. 1820 will be an apt zone on the lower end, and 1920 being a resistance, one should try to book their profits on the higher end. While if there will be any kind of breakout above 1920, then one should try to accumulate above 1920 for a target of nearly 80 to 100 points on the higher end.
All right, that's the day coming in on Infosys. But with this, viewers, it's now once again time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries there. And moving on to the next query, Osho, I'm coming to you for this one because this query is coming in from Subrata Mukherjee, and he wants to know, is this a right time to buy Tata Tech for medium to long term?
See, from short, medium term perspective, yes, one can definitely try to accumulate this counter. It has already seen a very strong correction, although technically there is no sign of respite for the time being. So the better perspective will be better to wait for some kind of recovery in this counter. If it crosses the zone of 990 to 1000, then it will give more conviction in the buying end. So I would rather say that one should wait for some kind of a pullback or some respite from the falling in this counter. And once it breaches the zone of 990 or 1000 on the higher end, one can definitely try to accumulate from short, medium, or even for long-term perspective.
And try to accumulate when it comes to Tata Tech from all three perspectives, short, medium, as well as long term. But Sharmila, I'm going to come to you with the next one because we do have Natarajan Sitaraman writing to us. And he's writing to us from Hyderabad, wants to know about a couple of counters actually, Bajaj Housing Finance as well as Geo Finance. He wants to know if any of these counters are a good bet at present levels.
I think both stocks are a good bet. The question is that what I'm trying to say is that you will have to have a long holding period on both. But given the fact that Bajaj Housing Finance, let's talk of that first, that's a recent listing. So given the market that they're addressing as well as how they are placed, I think there is money to be made here. But you need to be patient. Joe Financial Service also, they've done reasonably well over the last couple of years, but they are getting into newer businesses and you need to wait for that, the positive effect of that to show up in the balance sheet. So from that perspective, if you buy at this level, you would need to keep that patience because you do read time to time, the kind of new businesses that they're getting into, and they're all good businesses. So that said, for the positives to reflect in the balance sheet, you'll have to give it a couple of years. So that would be the advice on both. Both look good to me at this point in time, but your holding period, as I'm saying, should be 12 to 18 months.
All right, that's the take on this particular counter. But Osho, the next query that I have is from an F&O segment, wherein Sandeep Sharma from Gurgaon is having 6 lots of HAL. His buy price was 4,500 rupees. It's been 2 months that he's holding this futures. Good to hold on or maybe sell them at no profit and no loss right now?
Overall, the counter was into a very strong corrective phase, making lower lows, lower highs on the time frame chart. But overall, in the last 3 trading sessions, the counter have seen or emerged above the sloping trend line. So from here onwards, there can be a trend reversal in this counter. So for now, if he has already holded this position for nearly 3 months, so I would say better to hold it for a December month also, because the trend has reversed in this counter. It has taken support of of its very strong support of 200 the simple moving average and even the cluster of its short-term moving averages also. So from here onwards, one can definitely look for investment or to accumulate more or to hold their position for short-term perspective. I am expecting approximately 4750 to 4800 kind of a target in the coming months. So definitely a hold.
So that's a definite hold coming in on HAL futures, but I'm going to come back to you, Sharmila, because we do have Manjula writing to us from Chennai. Wants to know about the 10 shares that they're holding on to of InfoEdge at an attractive buy price of 3,465. They've been holding on for the past 3 years. But what do you make of this counter at this point? Advisable to book profits or hold on for just about 3 months longer?
You can continue to hold. I think the buying price is attractive, the business is attractive, the valuations are high. So a fresh buying is not recommended at this price. But since you already have shares at a lower price, and you have a scenario where a lot of mid caps are correcting, but this has sort of held its own. So I think continue to hold and maybe even for longer than 3 months, but you can definitely revisit in 3 months and see where to go from here. But in my mind, for now, it's a definite.
So that's the take coming as far as InfoEdge is also concerned. But thank you so much, Osho, as well as Sharmila, for joining us. Those were all the queries that we could pack for you viewers on this show. Time now to say goodbye on Buy Now, Sell Now. But next up, we do have Markets at Noon, so don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.